let's get clear on where the market is and get an update on the actual market statistics. Now, the basics of it, the word economy is you have buyers and sellers where they intersect. That's where the market is. On buyers, we measure that by the interest rates. That's going to drive the activity. And on the seller side, we look at inventory. So let's take a look at where the buyers are today as far as current interest rates. And the rates had dropped back down a couple weeks ago from almost, actually slightly over 8% to now about the 6.75. It's been this range now for a couple weeks. So after a whole 6 months of a constant march up, and every article was, are they going to go past 8 to 9 to 10? Is a hyperinflation? The answer for today is not yet. And we're now at about 6.75%, which is about where they were in June, and rates that are clearly low enough to drive a lot of buyer attention and pushing buyers back into the market where others had come out. Now, will they stay there? Will the Fed raise it, lower it? We talked about that in my predictions a little bit. Hard to say and predict the future, but that's where we are right now. As far as the seller side, the inventory remains at all-time lows other than during the pandemic period. Now, it is somewhat higher than the record of the 2021 pandemic year. It's more in line with 2020 and 22. But you can see that if you look at the chart, it's still way below any non-pandemic year ever. And as long as there are not enough houses to buy for the buyer demand, as long as there's fewer than there should be, given the number of buyers in the marketplace, prices can't go down. Now, they might stabilize, they might stay where they are, and for a long period of time, we'll talk about that, but certainly they can't go down unless there's excess inventory for sellers to bid against each other to drive those prices down.